Welcome back. I am so excited about this video. If you follow me on Instagram, you know my laptop has been acting very weird. So my friend Malik allowed me to use his laptop to make this video for you guys. So shout out to Malik. I just wanted to make a short video of how I approach the markets and my thought process behind taking these trades. I do want to give a disclaimer. I want this channel to be very different. So I feel like there's a lot of channels out there explaining technicals. So don't think this is going to be a channel, like I'm not going to go back to A through Z of support and resistance. Like there's so many pages that explain support and resistance. Me explaining support and resistance is not going to help you understand it more. But I will be showing my technicals a little bit here and there as you're seeing today. But I do want to focus on like the biggest challenges in trading is risk management and psychology, and bring on other traders that kind of explain how they go about their risk management and their psychology, which help them be profitable. Technicals is one thing, but risk management, they go hand in hand. So you can learn all the technicals, all the strategies off YouTube that you want, but it comes down to risk management and how you think while taking the trades, to be honest. So let's hop into this video. I'm super excited, and yeah, let's get into it. All right, so I clearly do not clear my charts, so I apologize. Let's go ahead and hide the drawings. So NAS has been in a clear uptrend for quite some time, so since January 6th. So for me, the majority of pretty much all of my trades I take with NAS, they're going to be buys, right? Trade with the trend. So clearly there are selling opportunities. For example, right here, this is a selling opportunity, right? But however, the buy opportunity was so much greater. Here, it's another sell opportunity. But look, the buy opportunity was so much greater. So if you're looking for bigger moves, then following the trend is best. And plus, to avoid like any like fake outs, just following the trend is typically always the best. Like trade with the money. And yeah, and this is a clear liquidity grab. Like it grabbed this liquidity here and then went straight down. Like let's even pull up an example of liquidity while we're at it. Liquidity. Ooh, wow, what was that? What? Oh, I cannot spell. I don't even make fun of me right now. Okay, I spelled it right. Yeah. It's in trading. All right. So liquidity generally refers to how easily or quickly a security can be bought or sold in a secondary market. Liquid investments can be sold readily and without paying a hefty fee to get money when it's needed. So really the keywords in this were easily or quickly when money is needed, right? And that's exactly what you see here. It quickly went in this area and it quickly sold out of that area where money is needed. Even down here, it grabbed all this liquidity and came out of that area very fast. So clearly there are selling opportunities within this whole uptrend. Even right here, this is a nice selling opportunity. But let's see if this buy is going to be even greater. This is the trade I took today. I don't want to go over this week's trades. I'll just go over last week's trades. Let's hop down to the 15 and 5 minute. Before I do, just to kind of give you what these zones are, I always hop to the 1 hour zone, 1 hour time frame, and I mark off my 1 hour zones. So basically, you know, wherever price reacts off the most on the hourly, I'm marking it off. It reacted right here, marked it off. Reacted here, marked it off. So support and resistance, that's what I was kind of talking about earlier, the basics. So I'm marking off my support and resistance areas on the hourly time frame. And then I hop down to the 5 or 15 minute to look for my confirmations. Let's go to, we can start here. So my top things I kind of look for are head and shoulders, inverted head and shoulders, and break and retest. I would say that's the main things. And then I kind of add my confluences to those. So I've noticed that price typically reacts on or to the area where London session was. Not all the time, but just sometimes. So for example, here, this was 3 o'clock, 3:10, prices in this area, right? So during New York, let me see, where was 930? This is the 930 candle here. And typically 930 is around the time of manipulation because that's the New York Stock Exchange open. So here we literally didn't get any information. We just see it selling. And since we know we're in an overall uptrend, we're looking for buying opportunities. So we don't really get much here at this point. And then later on, we kind of get this just choppiness, consolidation, whatever you want to call it. So at this point, I'm just waiting for what my confirmations are. And then price broke above and retested. So this is clearly a inverted head and shoulders. So you have this wick, which was the 930 candle, formed this left shoulder. This is the head, and then price broke and retested and to give us that right shoulder. And for me, I like entering in a reverse price action. So that would be my entry, the bearish candle. And then my stop loss is a little bit underneath the underneath that. So one, I'm going to target that London session area because what did I say? Typically, price likes to react on or towards where London session was. Not all the time, but this can be my take profit one. But I do prefer to trade hour zone to hour zone. But since we were below this hourly zone, this is definitely my target. So if it would have broken above and gave me some extra re-entry opportunity, I would have targeted this 1 hour zone up here. All right, so that was that day. Let's keep going. I don't believe I traded this day, but you can even say this is like a break and retest of this trend. It's just super choppy. We're just gonna go ahead and skip that. All right, here we go. Let's go here. So this is the hourly zone. This is the hourly zone. So we're like in the middle. So I just want to mark off a zone in the 5 minute. And let's see here. Yeah, that's really nice. So this is London session here. So it's reacting on that area or zone. But really look at price's behavior. So whenever you're marking off a zone, how is price reacting? So here, the moment it touched this zone, it shot down. The moment it touched this zone, it shot down, right? So price is essentially people. So when people came in this area, they sold immediately. So, and then over here, price broke above, and then let's see what time this was. 8 a.m. So the start of New York session, it shot off. So this is a great area to look at. So for me, I really don't like to trade before 9:30 New York Stock Exchange open. I really don't, because it's like a lot of manipulation happens before and at 9:30. So at least we know when around 9:30, this is an area of entrance, right? So at 9:30, this was the candlestick manipulation. Some people, they would have seen this bearish candle and been like, oh my goodness, I don't know what to do. I'm confused. However, it rejected this zone, right? And then it shot up. So once again, I like hopping in on reverse price action. You can even see this as a break and retest, right? That's another confirmation. And then one thing I also like to do is on the engulfing candle, I'll draw like the fib and then mark off 50% of that fib. And it completely respected that. So not only do we have price respecting the zone that it clearly reacts well off of, we can even say a break and retest of this mini trend, right? It even broke structure here, came back and retested. And typically, I'm sorry if I'm talking fast. This is my first video like explaining myself, but typically when it comes to like break and retests, they're like mini inverted head and shoulders anyway. So if we go down to the line graph, that's what we have. So we have that break of this structure here, retest, and then we shot up. So that's why I like hopping in on reverse price action, because one, Nas is not playing, leaving my ass in the dust. And my stop loss would have been a little bit below this area. So yeah, so 26 point stop loss. I trade zone to zone. However, this is very close to my hourly. It's only a 1 or 2. So really just seeing what price does. So once it hit that area, I'm definitely moving my stops to break even. And then it clearly shot right above. So now I want to target that next hourly zone, right? Which is above here. It did not reach all the way up there. So at this point, this is the evening. Like I do not like staying in the charts for way too long. So by 12:40, I'm getting these little candles, I'm exiting, right? So I would say I'll exit about right here. Or even after this fat bearish candle. So I'll probably get out right here. So this is a 1-to-8 risk reward ratio. Love to see it. And then I make it very simple, and then I add I'm just gonna say my seasoning. So I add my seasoning to it. So you have the basics, and then you compound your different confluences onto the basics. Like I believe foundation is so important. That's like even if you play a sport, right? If you just went on a losing streak, what does the coach typically do? One, yell, but two, they say, "Oh, you guys don't, you brought." Bruh, I'm like, I be nervous making these videos. You guys went on a losing streak, huh? So y'all forgot I play volleyball. Y'all forgot how to pass. So all day in practice, we're gonna go back to the basics. We're gonna be passing all day. We're gonna be passing all day, right? Y'all love offense, but don't know how to play any defense. So we're gonna go back to the passing. We're gonna go back to setting. We're gonna go back to the basics of things. And then after we've trained the basics for a whole day of practice, we are now great at the basics again. We got to just refresh our memory. And now we're going to add on the seasoning. We're going to add on the plays. We're going to add on the offense, and all these different things. So now we have a great foundation. And not only do we have a good foundation, we have all these other things that increases our probability to win. In any sport, we always have plays, and the plays increase our probability to win, right? And that's why we have them. So think of your confluences as plays in the market that increase your probability, because this is essentially a probability game, right? You already start at 50-50, it's buy or sell. So how can we increase our 50% to 80% chance of winning this trade, right? All right, so let's keep on going because I don't want to ramble. All right, marked off this zone already. So this is London here. Oh, what time is this? 3:20. Okay, so I want to mark this area off because this is a nice inverted. And what did I say? Price behavior. So the second price came in this area. This is a huge bearish candle. What did it do in this area? It stopped, right? And then went up, right? So price here, it shot to this area, small candle, went down, shot back to this area. And then over here, it's reacting very nice off of this zone. So this is definitely an area of entrance. So 9:30 candle manipulation. Some people would have feared that candle and said, I'm definitely not buying, right? Me, I'm all ears. So my entry would have been great right here, because not only did it stop and halt at this area of entrance, it didn't even close below it. It didn't do any of that. It halted. So for me, my stop is honestly, I'll probably put it below this head. So right here, so 30-point stop loss, and then target the 1 hour zone. However, if you're not completely comfortable with taking this trade, you can wait it out. So let's say that, you're more comfortable when you have some more confirmation. So what's something else that you can confirm in this? So this is the latest high, right? And then it broke above that high, right? So since we have a break above that previous high, that's one confirmation that the market wants to start going in a bullish direction. And then for me, I'm going to throw that fib right on here. Mark my 50%. Price, price completely respected this 50% area. It did not close below it, but it kept wicking in this area. That's another confirmation for me. So you can definitely take a re-entry or entry at this 50 or at the close of this bearish candle, reverse price action. And then my stop, I'll say below here. So it's like below this area too. So it's still a 30-point stop loss targeting this zone. Boom. And I really love this candle too. So it's just looking at how price is reacting in different areas. So we have multiple confirmations for this entry, and then not as many confirmations for this entry, but that's just more this is more of an aggressive entry if you would have took it right here. This is the more safer entry. And yeah, and we targeted that 1 hour zone, and price kept going. Like sometimes it's gonna keep going. It didn't hit that other hourly zone. But I mean, you could have kept moving your stops in profit and keep trading it. But if you're happy with your profit, why even risk losing it, to be honest? Or even like do too much. So this is a 1, 2, 2. Or if you like target the zone for real, it's like a 1 to 3. All right, let's see what else we got here. Let's do like 1 or 2 more examples. So here, I don't want this to be too long. All right, I already have it marked off. So we have, I actually posted this trade I took. I took the buy in this versus the sell. The sell was nice. I must admit, the sell was nice. So why did I take this buy? So price is currently at this hourly zone. Love that. That's a confirmation in itself. So we're at this hourly zone. This was London up here. So what are we kind of expecting? At least minimum TP1, right? And then TP2 up here. So price is currently at this hourly zone, and it's a lot of choppiness here. Typically, when it's a lot of choppiness, I move to the 15-minute because it's like a cleaner version of what the 5-minute is doing. So before we move there, I see this as an inverted head and shoulders. It's probably what I saw before. And price moves in threes. One low, 2 low, 3 low. Then it took off, but it's super choppy. Let me circle this here. I want to go to the 15-minute really quickly. All right, so 15-minute. Okay, yeah, I see it. All right, so price does like to move in threes. And then if you look here, we have this bullish engulfing, and I love this candle right there. But if I'm just gonna mark with 50% on this bullish candle, 50 is right here. All right, what is it doing? It's completely respecting it. And this is probably the third hit here. It completely respected the 50% of this engulfing candle. And then entry here, I believe I took that. Let me see how that looks like on the 5-minute, because you can get a even better entry when you scale down, targeting minimum this area of entrance. Just look how it price reacted off of this area. So that's definitely an area of entrance. And let me go down to the 5-minute to see if we can get a better looking entry than what that was. It's in my highlights. If you want to check that out. This was on January 19th. Yeah. All right. So yeah, that was the third hit. So better looking on this zone. So on that shoulder. So right in here, or even that candle is nice too. So in this area, right, just take the move before it shoots up. So then I'm putting my stops. What time is this? Okay, this is before 9:30. I took this before 9:30 for sure. Probably just because I like the fact that I was respecting the 50% of that 15-minute candle. And this is clearly at a 1 hour zone and forming a inverted head and shoulder. So I kind of break my rule if it looks good. So yeah, it looked good. So let's say I entered in here. Either way, stops there a little bit. I don't think I had a huge stop. Kind of by this head. Because it shouldn't be in this area anyway. Targeted that London session area, and it came out to a 1-3 risk reward. So that was a great trade. I can do one more example, how I keep it very simple. And of course, this is not all my confluences. I'm just showing you guys a few of them of how I'm like very comfortable with taking the trades. But this is definitely just a few of the basic ones I have. All right, so bell retest on, we did 8:30. What are you talking about? All right, let me just get some stuff off of my chart. So this is a pattern in itself. This is a pattern in itself. So we are consolidating right here, right? And this was London. So price reacted off of that zone at the start of the New York session. So it kind of broke above a little bit and retested. It really shot up here. We have this huge wick. What the day is this? The 18th? I don't think it was news this day. I don't know. I have to go back to it. But it kind of went above, retested here. Not too liking this wick too much. Just gonna wait it out, right? Patience. So what time? What time was 9:30? This was the 9:30 candle, literally giving me nothing. Like that was such an like a whack 9:30 candle. And typically when it's a whack 9:30 candle, the move happens later on. So we know it's kind of reacting in this area here. So it came in this area, shot down. So price does like this area and it's wicking off of it. It's not enough information to give us a sell. Once again, we are looking for mainly buys, but this was actually a good selling opportunity since everything made sense, right? The majority of my entries for the week, buys, right? We have a break above, love that. It retested this doji, tested this 1 hour zone, and then came down, and then came back up. And then what did price do in this area? It shot down, right? So we like this price/people love this area. So on this bearish engulfing, I'm entering because just the way price has reacted in this area, and it's a head and shoulders at the hourly zone. I'm placing my stops above here, above this wick here, and then I'm targeting the 1 hour zone. So clearly this kept going. It kept going a little bit further, but I'm only targeting this 1 hour zone. And now it's at 12 o'clock. I'm out the markets for sure. So that's how I use my confirmations in this trade. Hourly zone to hourly zone. Price reacted off the previous London session, but not during like 9:30. But at 9:30, we didn't get much. So we waited till we got like our confirmations. And then we sold after this bearish engulfing here. Love to see it. So that's just how I approach the markets. I keep it very simple. Once again, I do have more confluences I add onto the charts that I could use. But the ones I show, they still had 2 to 3 confluences to take these trades comfortably. And yeah, and I believe this had like a fat order block, like a higher time frame. And that's why that shot down super nice. Like price really loved that area. But yeah, so I hope this was helpful. Just keep it very simple. And like I was saying earlier with the analogy with sports, revert back to your foundation, make sure that's strong, and then re-add your confluences, re-add your plays, your seasoning to the foundation, because I feel like sometimes we forget, oh yeah, I forgot we need to trade with the trend. Oh yeah, I forgot support and resistance, So kind of go over the foundation, make sure that's solid, then go back and add your plays and see if this helps your trading overall. But it's nice talking to you guys. I will catch you in the next video.